Let's do it.
Let's do it. 15.
Woo! 15. How did we get here, Tricep?
Don't remember.
How is your arm doing?
Not too bad. No more pain. So it's doing pretty good.
They've reattached everything.
Reattached it, yeah.
And apparently it's taking on well. So we're going to have to deal with you being here.
So far, so good, yeah.
I'm going to have to find some other devious way to get rid of you. How was your week otherwise, other than the tricep, other than being trapped in your cast and driving you mad?
Other than that, it's been pretty good. It's been hunkering down, studying, getting stuff done.
Getting stuff done.
Knocking
it out of the park like usual.
Yeah.
You've been beating me like a rented mule at the gym.
I have been, yeah.
You're really relishing this injury. You're taking advantage of it.
I'm taking this out on you, so.
I see that. I feel that. It's brutal. It's brutal. I appreciate you being there, but it's brutal. My week otherwise, other than the gym. Other than that, it's been fine. I was just dealing with you. You're a masochist. This tricep has turned you into some sort of monster. No, it's cold.
It is cold.
It's freaking cold again.
Oh yeah.
Can we get over the cold already?
I wish.
It's February at least.
It is February. Yes.
You know what else is cold?
What?
The markets.
Oh, ice cold.
It's February.
It is February.
It's February in the markets. I can feel all of this winter that's gone on now in the United States and Canada. I think it's started to really freeze over even positive sentiment at this point.
Yes.
I think people are they've had enough. We need some summer. We need some summer.
Summer now.
So we can really relish in how good things are, because right now, even when things are good, they're not very good.
No, that's right.
Yeah, it was one of those weeks.
Yeah.
It was one of those weeks. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
This is podcast number 15.
Number 15 is
and that's not counting 10.5.
No,
we don't count 10.5.
This would be 15.5.
Yeah. So we're deep in the trenches now. I'm happy to be back with you.
Yeah, I'm happy to be back.
Lots of earnings again.
Oh, tons of earnings.
Just to warn you. Forewarning to everyone.
Forewarning.
That, like we said last week when there was lots of earnings, this week, lots of earnings.
Lots.
Big companies.
Big.
You feel free to lead the dance, my man. You've only got one arm.
Okay, so why don't we go further into why the markets took such a big blow this week?
The markets have, I think they've reached kind of a tipping point, Right. I don't want to be that guy. So Dow closed the week 25,520. S&P closed the week 2,762. NASDAQ 7,240. And the TSX 15,606. Everybody's down. I mean, everybody was down on the week. Everything was down. The S&P 500 on Friday, all 11 sectors fell. We remember last week, all 11 sectors were up throughout the week.
Yep.
This is the biggest weekly declines since 2016. The Dow was down 665 on Friday. Okay. Do we want to know why I think this is happening? I don't think I can fix it. I'm telling you, I cannot fix it. There's a bunch of different things that are going on. A bunch of different things. So we've got rise in bond yields, I think, are really starting to take a little bit of money off the table just because money's starting to flow into bonds a little bit. Now, I know there's a lot of people out there in the bond market that want to tout the rise in bond yields as being the only determining factor as to why this is happening. I don't think that's the case, but I do think it is the case to an extent as you see a little bit of outflows from the equities market into the bond market. You're going to obviously have just a little less for the pricing. There's obviously going to be a little more volume. There's going to be more out there available. You might get bigger spreads. You're going to get a little bit of change, but it's not going to be enough that a lot of the bond guys are patting themselves on the back for. I would still rather be in equities than be in bonds at this point, but bond yields are going up. Hourly wage increases in the economy, again, it might have a slight impact. It had an impact on Friday. We started to get jobs numbers this week, and like a lot of the jobs numbers that came out late in the week really pointed to not only good growth and everything's sustainable, everything's holding its own the way it's supposed to be, but a 2.9% in hourly wage increase. Things are costing a little bit more.
Right.
Okay, so but on the flip side of that, we start talking about things costing a little bit more. We know the Fed is hoping inflation goes up, and the Fed met this week, Janet Yellen's last meeting with the Fed, and we know the Fed wants inflation to be up over the 1.7 or 1.8 that it's been, but inflation hasn't been there. GDP is growing at a pretty phenomenal rate and expect to grow pretty phenomenal through the first quarter here, through the whole year, to be honest with you. So I think ultimately what it comes down to is it's not bond yields, it's not wage increases, it's just that's it. We've just run our course. It's been up for how long do you want it to be up?
Yeah.
How many sectors do you think need to be, well out of their price to earnings range, like where the entire sector, every company is playing out of the range? We talked about this last week. Do we start to look at this as a new ball game entirely, where price to earnings are always going to be overinflated from what we're used to historically? I don't think that's necessarily the case. I think we're going to have to let things catch up. I think we've priced in a bunch of growth, which is there. These companies are doing well. We just had good tax reform. A lot of companies just got a big EPS bump going into this year. They're going to get better tax rates for years to come with their business inside the United States. The United States is growing. The economy is growing. Things are doing good. But we've priced in the growth now in the heat of the moment, in the fact that things are going so well and that we're caught up in everything. I think we've started to reach that point where we're going to plateau, and you're going to see days or weeks of ups and downs instead of these weeks of ups. We've been up 15 months in a row.
Too long.
It's not too long. Again, valuations, a little bit high, granted. We're going to grow into those. Like if you bought a pair of shoes that were too big when you were 10, you're going to grow into those shoes. We're going to grow into these valuations because you look at trailing price to earnings to forward price to earnings on a lot of these companies. And while the trailing price to earnings puts them out of that sector's range, forward price to earnings on a lot of these companies really bring them back to reality. So I think going forward for a couple of years, things are in good shape. Where do you forecast things a couple of years from now? I'm not entirely sure, but I know that going forward over the next couple of years, everything accounted for should bring us to those growth numbers that we see priced into these stocks now. But the issue is they're priced in already. This isn't fourth quarter 2019. This is first quarter 2018. Prices are priced in. I think what you're going to see now is a lot of ups and downs. You'll get up months, you'll get down months. You'll get sell-offs like this week. We had earnings that were good, but none of the earnings had there was no impact. It just wasn't enough. And it seemed to me going into this week that they already wanted earnings to be bad. They mentioned it. Analysts were on TV mentioning this before earnings started. They wanted the banks to be off, and the banks weren't off enough that it rocked the market. And then they just moved on to more and more till they were looking for pristine earnings. And if there wasn't pristine earnings, we were going to see a sell-off. You weren't going to get pristine earnings. That wasn't going to happen. There's been just too many quarters of almost everybody being up. We were eventually going to get a bit of a drawback, and we got a marginal one. But I mean, earnings were still really, really good. On an over and above case-by-case basis, really good. A couple companies underperform, no big deal, right? That's going to happen. That's always going to happen, especially when you've got this Jobs Act that came into play and the tax reform. There's some companies that had to eat a bunch of tax charges, because there's companies that were getting tax rates that are going to be changed. They had to eat some tax charges. Things just are what they are. But I think we've just reached that top over and above everything else. I think there's just been so much growth priced in that we're going to see ups and downs, and you're going to have to get used to the fact that it's going to be a little more choppy. It's not that it's not going to continue to grow. It's that from what we've forecasted out, or what the market's forecasted out into the future, a lot of the prosperity is already priced in because we've been running like greyhounds for months, for years. It feels like you can't expect this stuff to continue to go on, and I don't think it is. S&P 500 has risen 15 straight months. It's up 50% over the last 2 years. 50%. That's real investing. This isn't cryptocurrency nonsense. This isn't, pie in the sky hooey. We're talking real money here, real companies, the companies that shape the world, up 50% in 2 years. That is astronomical growth. Will we fit into those shoes that we bought that are a little too big? Yes, because the economies that need to be growing out there in the world to make these these companies flourish to these numbers are growing at the same rate as these companies are. The United States, Canada, Germany, Japan, these countries are growing at a clip. There is no slowing down, just macro growth across the globe. It is killing it in the right areas. But the issue is overpriced right now. Yes, I think we're going to see people start to do all sorts of things, take advantage of those bond yields, pull a little off and move it over to whatever, like you're gonna get a little bit of movement, you're gonna get a little bit of pullback, there's gonna be some sell-off as people start taking a little money off the table. I can assure you it's not over as like things are bad. I just think things are now gonna start to get, it's going to be more challenging. You're not just going to be able to pick any horse in the race and run with it. You're not going to be able to pick just any stock in the middle of the sector that has no real growth potential, but just gets like pulled along with the tide of other winners. This is now going to be a winner's race again. You're going to have to start picking winners. And that's the way this should be. And that's the way it is historically, is the stock market is based on, can you pick the winner? That next generation, that next business cycle, that next winner in that space of time. And if you can, you grow. Recently, we've been coming back from a recession that was way oversold. It's been coming back for a long time. Economy's coming back right along with it. And now we find ourselves a little overbought. Almost every company was pulled along with the tide. There's companies that got to grow that didn't deserve it. Now it's going to be back to pick yourself a winner. You don't want to ride with the winners, bro. I think you're probably going to find yourself performing under the market. You're probably going to get more where the index starts to perform on a much more historic, I hate to keep using that term, historic level as well, of very slight double-digit growth, if not high single-digit growth, because it's going to take the standouts in sectors that aren't already overbought, that have growth prospects on the horizon that are visible but not priced in. And when those tipping points hit, that they become more than visible but tangible, then those companies are going to run. But not every company in that sector will get pulled along with it.
Right.
I think personally, so that's my opinion on where I think the market's going. Because I just keep looking at this, and it seemed almost predictable this week to me personally. Yeah. I thought this is naturally going to occur. I'm not shocked it hasn't occurred yet, but I knew it had to. And it just seemed like we were at that point where everybody's in. We'll get into the economy numbers. You start out, you ask me about the economy, and I'll get into the economy, and then I'll explain to you why I think my gut instinct starts telling me that there's going to be a bit of a changing of the guard. It's not going to be so astronomical that things are going to turn bad, but it's going to be enough that things are going to turn to, you're going to have to go back to having the foresight and the research and the education and the luck on your side. Right. You're not just going to be able to go along with it. So that's why the economy is the way it is, because of all that jarbled nonsense.
So what else is going on in the markets? Anything else spectacular going on?
Up here in Canada, the cannabis index down, companies down 19% on Friday, Aurora down big time. Same with Canopy, just a correction. There just needs to be that type of correction. We had the State of the Union down in the U.S. on Tuesday. Donald Trump bragged about creating 2.4 million new jobs in the United States. There's rising wages. Unemployment's at a 45-year low, he said. It's actually at a 17 or 18-year low, but still doing really, really good. The GDP forecasts we got this week were both really crazy. Atlanta Fed tracker GDP growth for quarter one is 4.2%. GDP Now's forecast for quarter one for GDP growth is at 5.4%. Those are blow it out of the water numbers. And this is why when I was saying about the markets and the way the markets were, that there's kind of two sides to this story. There's the side where I think the market's overbought, but then you start looking at these indicators, all these economic indicators, and I preface all this by saying economic indicators are in the past. They tell you a month ago, 2 months ago, where things were. They're not caught up to where things are today. The equities market is going to be your absolute best barometer for where things are right now, what somebody feels about something right absolutely now, given the news that's available in this very moment. because it takes a trickle-down effect, obviously, for things to take place then on whatever marketplace these companies or these indicators take their numbers from, and then for those numbers to show up a month later as everything's tallied together. But still, so through December and January, a lot of these numbers come out. So like we said, the GDP growth for quarter one, outstanding as far as the way they expect things to be. The U.S. Fed met this week. Interest rates between 1.25 and 1.5 stay steady. 3 hikes still expected in 2018. Inflation expected to rise. They're hoping it to rise. Like I said, inflation's at about 1.7, 1.8%. They're looking to get it much more near that 2% mark. Janet Yellen's last meeting with the Fed, you can expect there's probably going to be some policy amendments as a new face takes hold, but you can expect also that the Fed is pretty steady. They're watching the economy move along. Those hikes are still coming, but they're not pressing the throttle down on and making it happen. I'll get into jobs in a minute, but Redbook chain store sales up 3.2% year over year. That beat estimates. 30-year mortgage rate rises 4.41%. This is the third increase in rises. This isn't interest rate. This is mortgage rates. This is the 30-year. It's going up. So while sentiment goes up, construction spending in December up 0.7% month over month versus a 0.4 estimate. So construction spending continues to go up. Investor confidence, and this is my thing. Investor confidence in January plus 6.4%. Volatility remains really, really low. When all the retail guys get in, this is the reason we do the videos about retail investors and why they're suckers and why they lose their money because they don't know how to invest properly, because they try to catch a falling knife or they try to get in at the tail end of everything. They're not paying enough attention until people are like beating on your door going like, can you believe what the market's doing? Are you paying attention? Like they don't get in till there's too much positivity. There's too much positivity from like your neighbors. It's not the positivity on the TV. The positivity on the TV is almost changed to where people have started to become like worried. Like, are we a little too far gone? And I think we are too. Like we're not so far gone again that it's overpriced. We're just so far gone that it's overpriced for today. It's not overpriced for projected growth. Right, okay. But your neighbors, they don't know that. If the retail guys start getting in, like even more so, if they start getting out of the crypto stuff and start getting into equities when confidence starts going up, it worries me because mortgage rates are going up, interest rates are going to go up. People have been out on credit. You see it with Visa and MasterCard and all these companies that report things about credit and defaults. You see that stuff out there already. It's already people further on the hook. When retail starts getting into there, you all of a sudden, I think you have a problem with the fact that the marketplace just knows how to rope a sucker in. You know what I mean? That's a
good way of putting it, yeah.
They just know how to do it. There's been so much positivity. There's been all the cryptocurrency pullback recently. There's all the tax rate stuff. The economy looks great, man. I just want people, if you're getting into the market right now, don't do it. Just breathe for a little bit. Stop and assess. This looks like a time to assess. Maybe that is the best way to put it. Contrarian views on my end. I think things are overbought. I think they're overpriced. I don't think they're not going there. But I think a lot of the economic indicators still say that things are going in the right direction. But retail investors getting involved makes me weary because I know retail investors, a lot of time when they're involved, that's a losing trade.
Yeah.
So I have mixed emotions, mixed opinions, and I would like to say to anybody else that's listening to it, sit on the sidelines for a little bit. Maybe sit on the sidelines till next earnings, right? Sit there and just see what's up. If you're out right now already, sit out. If you've made a bunch of money, feel free to take yours off. Play with some house money. Don't ride all this stuff because it can become such a slippery slope. And I would hate to see people lose anything that they've got over the time that we've had that's been so phenomenal because it needs to come to an end sometime.
Oh, it has to.
And is this week going to be that death knell where all of a sudden like everybody's like, do you remember that week? You remember the week it was down pretty much all week and none of us decided like, hey, this is it. We're going to ride it out. And you remember how the next week was the same? And then we kind of all were like lying to each other about how we wanted to stay through, the storm. Yeah, but we were all just you're all just too struck in the moment to actually like wake up and go like, uh-oh.
Right, yeah.
We're on the downswing here now, right? Like if there's a correction, I want people to be cognizant of it. This week, I think, is a wake-up call that we are still in money reality. This isn't fairy tale land where everything just gets to be magically perfect. Not anymore. So welcome to reality. Economic indicators good. Jobs came out, like I said, at the end of the week. ADP jobs report of jobs added to the U.S. economy, 234,000 versus 195,000 estimate. Non-farm payrolls up 200,000 versus up 184,000 estimate. So those both beat. Unemployment rate stays steady at 1.4%. That was the estimate. That was last week. Like I said, a 2.9% increase in hourly wages. We were down 1,000 in initial jobless claims, but up 13,000 in continuing claims. So people are still on the unemployment market, but the initial claims are definitely slowing down. It was a good jobs report. I mean, everything coming out looks great for the U.S. economy still. The GDP stuff has me quite giddy. I'd love to see it. I think the thing... Let's just keep talking about it. You know what? The markets are probably the topic of the week. There's no question about it. Even with all the earnings, there's nothing that really takes precedence over the fact that the market has taken a bit of a paradigm shift, and we're actually looking at some downs. This is we had the first 2 down days in forever. Like Monday, Tuesday down together back to back was the first time in forever that the days were down back to back like that. I think the thing is the U.S. economy doing this well. If we can, business isn't going to turn it around. Business is already overpriced. Yeah. Business is great. It's steady. Dividends pay well. These are good, solid companies. They're not going nowhere. But if the government turns around all these infrastructure plans that they have and really start getting first projects expedited through the process a lot quicker, instead of it taking 7 years to get a bridge built, get it down to 2 or 3. You'll get production up, you'll get labor up, you'll get manufacturing up, you'll get all the engineering, the arc. I mean, you will get business booming around the country if you start working on what is basically a D-rated infrastructure system across the United States. It is a terrible infrastructure system in dire need of repair. If they can get that infrastructure stuff underway with the GDP growth and start putting money into that is a way that I could see that country really, really taking another step. Like, how do you go from 4.1% unemployment? There's nowhere to go. That's destructive unemployment. Like, you could get a job being an astronaut with that kind of unemployment, right? Yeah. I want to be an astronaut. So, yeah, markets, great. Infrastructure is the big thing, I think, in the United States. If they can get that infrastructure stuff, and I know Trump really wants to do that, if they can get that underway and get the processes expedited. No 7 years for bridges and dams. Make it like 2 years. You telling me people don't know how to do all the safety checks in a short period of time? You need 50 different departments doing checks and balances. That's what we need, is we need a bunch of fake job creation programs. No, we need real jobs where people are building a hydro dam and 50 or 100 guys, skilled laborers, making $40, $50 an hour at work for 24 months or 36 months. That's what you need. That's how an economy is built. Exactly. Not some guy walking around with a clipboard looking at the same freaking plan for 6 months over and over again, making tiny sentence amendments. That's ridiculous, right? Yeah, let's get that going. Let's go back to the United States of Roosevelt and stuff and Eisenhower when things got built. That's how you build a country. That's how you build an economy. Why do you think America is the superpower it is? Everybody says it's from war. It's not. It's from the expansion that America went through. America grew in and of itself. It was like, no, we're making this our whole land, and they grew it exponentially. They're going to have to go back and fix a lot of that infrastructure now. They got bridges ready to fall down.
Oh, they definitely do, yeah.
There you have it. There's the markets.
That was the markets.
Woo!
We got headlines up next here.
There's still more to go.
Oh, there's tons more.
That was it.
We got more.
I gave you everything I had.
Oh, you better get your second win here.
Okay.
We got some headlines.
Okay, give it to me.
Moving right along to some headlines here. We got Aphria. They bought one of their competitors here.
Aphria,
sorry.
Yeah, Nuvera is who they bought. It's a Brantford, Ontario cannabis company. $826 million in cash and stock, $8.50 a share. That's a 21% premium. Nuvera is working with partners in Germany, Israel, Italy. Aphria is already working in Australia. Nuvera is only one of 7 producers in Italy that's already got that's already allowed to be a producer. So even though they're a Canadian company, they're over in Italy. They've got licenses, one of only 7 already. That's a market that's expected to be worth about $9 billion when it finally gets greenlit over in Italy. Nuvera shareholders receive $1 in cash and 0.3546 Aphria shares for this deal. It's the weed market up in Canada. Everybody's overpriced. They're all merging with everybody else. We've seen this last week with Cannimed and Aurora. I don't know really what to make of it. There's a lot of international growth in this exact little get-together here between Aphria and Nuvera.
Right.
They've got a lot of stuff already spread out across the globe. They're already in a lot of the different countries that have moved that next step towards either legalization or medical marijuana being a regular occurrence in society. That's a good sign for me. That's a lot more than what I see out of Aurora or Cannimed. It's a lot closer to what I see out of Canopy.
Right.
But again, this market, if the correction tells you anything this week, and those corrections seem to keep on coming, it's that market's, you want to talk about things being overpriced, that's overpriced and speculative. At least the stuff that's overpriced in the real equities market, the stuff where we were talking about originally, in the markets.
In the markets, yeah.
Yeah, in the markets, not this speculative marijuana business.
Yeah.
But if we're talking about that, those are overpriced with purpose. This is overpriced with hope. And I don't buy hope.
Can't buy hope.
Bro, that ain't happening. So, interesting deal. We'll keep an eye on it, but I don't buy hope.
Can you buy hope, really?
Can't do it.
Can't do it.
Can't do it.
So, Dr. Pepper and Snapple, Dr. Pepper Snapple had a merger this week.
They did. Dr. Pepper, Snapple, and did you forget how to say it? Is that why?
Keurig.
The guys that make the coffee. They make the little coffee, the cups. They go in the thing. Dr. Pepper Snapper shareholders receive $103.75 a share and retain 13% of the new company named Keurig Dr. Pepper. Jab International is in on this deal. Jab International has got $9 billion in equity investment in the deal. Jab is partnered with Mondelez International. Basically, they're a piece of Mondelez. Mondelez is Kraft. Kraft changed their name years ago to Mondelez. This is now so it gives Mondelez 13 to 14% of Keurig Dr. Pepper. So they got the supply lines are there.
Yeah, definitely.
Right? You get Kraft or Mondelez involved in things, they're able to get on every shelf in the world.
Oh, for
It's
sure.
not that Dr. Pepper or Keurig have a problem with that, but you've got a really good mix of stuff in there now between Kraft, Dr. Pepper,
Oh,
and
it definitely
Keurig.
spread out, right?
You're really covering a lot of the food aisles. So that's I thought that was a pretty big deal. That
is a pretty
it
big
didn't
deal,
get a lot of headlines. I mean,
surprisingly.
Yeah, it happened on Monday. And
That is a pretty big merger.
That's a pretty big merger, right? Like, I know none of those companies are I mean, obviously the Mondelez's, but Dr. Pepper or Keurig aren't massive in comparison to their competitors.
No,
Dr. Pepper's not Coca-Cola, and they're definitely not PepsiCo. Keurig is not, I mean, the companies that make the coffee are all owned, they're all subsidiaries of giant Procter and Gamble's or
like Folger.
exactly,
like that,
right? Like, so you're not gonna get massive companies here, but together and then with Mondelez makes it a pretty strong company with a lot of favorable stuff you can lean on. You know what I mean?
Sure,
The pipeline, all the tie-ins, everybody's connections. Everybody's got they cover a lot of space, square footage in a Walmart now. Absolutely.
Oh yeah, just about every aisle.
Absolutely. So I thought that was a pretty big story.
So, what's going on in the world of cryptocurrency?
What is going on in the world of cryptocurrency?
Are they up like they always are?
They're down.
Oh, really?
Down, way down.
Why is that?
They were down in the 7,000s. I don't know, because they're all garbage. So being garbage and nonsense doesn't help you because you're ridiculous. And honestly, like, you should really just check yourself before you wreck yourself. People got duped. They got duped at 19. They got in. People sold off. And it was the touchdown in the 7s. It's somewhere in the 8 now for Bitcoin. Everything works in lockstep in cryptocurrency because it's all the same garbage. There's no rhyme or reason to any of it. So when the top guy falls, everybody falls in unison because if Bitcoin ain't worth nothing, what are you worth?
Why would yours go up?
Yours ain't worth diddly squat.
Bitcoin, right?
You're not Bitcoin, right? So if we prove that Bitcoin's junk, then you're all junk, and they're all junk, right? So There's no the blockchain technology, great. A lot of companies are implementing that. A lot of companies are doing a lot with that, like in their future implementation of a lot of projects that they're doing. It's a good idea. Like I can understand it. It's just another gun in the holster for you. I mean, you want to try to do everything you can, but the cryptocurrency stuff, it's being boxed out. There's digital currencies from every other country that's being developed. India banned it this week outright, banned the trading, banned the exchange of it. There's none of that kind of stuff. So India is a major market. When you start getting countries like that get involved, China's involved. We've heard Korea's thinking about banning it.
That's right.
It's Russia, same thing. It's losing all the legitimacy that it was given. I think the CBOE and the CME shouldn't have legitimized it to begin with. I think that was a mistake. I think they added into the hysteria. I think they added in because there were weeks there where they added into the price going up. And I think they added into the hysteria and made some money off it. And I was saying that long before that I thought it was BS that they were getting involved in that. And then they ended up getting involved, and lo and behold, they ended up, with the market looking like it is now, you got a lot of people that are losing a lot of money.
I wonder if this is the downfall of cryptocurrency.
I don't know. You think it might not always just kind of linger there like herpes.
It might.
I don't know.
It might.
I don't know. It might just be there forever.
The foreshadow.
Yeah. It's just going to be there.
Yeah.
I don't think it's going to go away entirely. I just don't. I don't see. It's going to go more underground than it already was. It had its time in the limelight.
I think so.
And
I think that might be right.
It didn't do anything but make a bunch of greedy liars rich. A bunch of people who came out with these weird ideals about the way the monetary system will go. You ever see all those conspiracies on YouTube where people talk about the Federal Reserve and stuff? It was those people. It's a bunch of conspiracy theorists, right? It's a bunch of people who believe in these non-fiat government detached cross-border payment systems where they can, be free of their government oppressors or whatever it is, right? Like the patriarchy. I don't know what the heck they're trying to run from. It's nonsense.
Yeah.
You need human hands involved in monetary structure, in structuring the interest rate. That has to happen. You have to use the actual hand, the human hand, to manipulate things like inflation and stuff so that it keeps with the growth that you're trying to do. You can't allow things to just happen because that's the structure that's built. They have to be adjusted as things change, because things change in 5,000 different directions. They're not one straight line. So great idea and concept, blockchain, cryptocurrency, garbage, down again, if you're losing your money in it, you deserve it at this point. I'm sick of talking about it, and if you didn't take the warning and you think it's going back 19, or you're one of these clowns that think it's going to 100, then enjoy it.
Enjoy it. Yeah.
You should have. You should have got out. Yeah. When all the shoes start dropping, India banning. Come on.
Oh yeah, you must be a doughhead if you don't get it.
How many signs do you need that you could be in something better than this? Bond yields are up, Anthony. Bond yields. Go get yourself a 10-year. Go get the 10-year from the government. Enjoy your bond yield and get out of this. But don't listen to me.
Nope.
Invest in weed and Bitcoin. Do what you want to do.
Do what you want to. You're an adult. Do what you want to do.
Yeah, you're an adult, I hope. If you're a child, you really should consult with an adult that knows what they're talking about before doing any investing. I implore you to do that. Carry on. No more Bitcoin.
We have a couple of titans that teamed up for a partnership. JP Morgan, Berkshire Hathaway.
Yeah, this gave the healthcare industry a kick in the pants on Friday. JP Morgan and Berkshire partnering up to form a company that's going to lower healthcare costs for their hundreds of thousands of employees between both of their companies.
Oh, right.
So that's good on them. Good on them, right?
Yeah.
Take care of your army. These are the people. This is the front lines of your company. These are the guys that are implementing all your strategies. These are the guys that are carrying it out. These are the guys that are making you the money. This is the face of your company. The people that you employ, you want their workforce to be happy to go to work. They don't have to necessarily like their boss, but you want them to respect their boss. They don't have to like their job, but they should be proud of their job that puts the food on their table. You know what I mean? They should want to go there and want to succeed. And when you do this kind of stuff to help your employees out, it just goes to show that you value them as much as you expect them to value their job.
Yeah.
And that's a good way to build that employee-employer relationship that ultimately is going to get the best growth out of the company as a whole, which ultimately trickles down and adds to growth on the shareholder side. And that's what we're here for. So good on these companies. It did hit the healthcare business a little bit in the pants because these are big companies that have a lot of leverage that can go out and really make a difference in things. And if a lot of other companies follow suit, I mean, you might see a change in the healthcare business, the insurance business, whatever it happens to be.
Oh, it'd be a big change.
That might start suiting this way of going about things. But these are a couple of titans that have the money to make it happen. I think a lot of companies will see how this plays out before there's any kind of big tide changes as far as the way people go about doing this business.
Right. Samsung has been killing it out there lately, huh?
Destructive. I mean, we could do the earnings now because I don't know anything about Korean currency. So I did not write down how well they were doing in the Korean currency market, even though they're doing phenomenally well. It's growth all around at Samsung. But Samsung also did a 50-to-1 stock split. So that sent their shares up. I think it was like 8%, 9% when it happened. I mean, so that's going to give a much more broad investor base that's going to allow a lot more people to be involved in what is one of the biggest growing companies in the world. I mean, Samsung is a massive company. 50-to-1 stock split is going to give a lot more investors a chance to get involved, sent the stock higher. Samsung reported record profits this year. Consumer electronics only up 0.01%, as that's a market that's sort of tapped out for a lot of people. We just don't see consumer electronics selling like they used to. IT and mobile communications up 6%, device solutions up 38%, and display panels up 28%. Device solutions is where the semiconductor stuff is, killing it. Killing it. Display panels, killing it. They're the market leader for sure, well out in front of LG and stuff. The device solutions, semiconductors, they are near the top, maybe a little behind Broadcom. I wouldn't say they're behind. I wouldn't put them behind Texas Instrument. I wouldn't put them behind Micron or Advanced Micro Devices or any of them. I would say I wouldn't put them behind a lot of companies. I just wouldn't. I'm not Qualcomm. Maybe Broadcom. Maybe Broadcom might be it. Samsung is slaying stuff. They are just a company that is
killing it.
They're doing everything. They're destructive. We don't get enough Samsung coverage. They're way over in Korea. Yeah. They're over. Do you know where that is?
Oh, yeah.
That's a ways from here.
Long way.
It's like a boat ride for like 4 days.
It's like an ocean.
It is a whole ocean. It's too much water.
It's way too much.
I don't think you can swim that.
No, I don't want to get eaten by a sea monster.
No, I don't. Are there sea monsters?
There's sea monsters.
Whoa.
The Kraken.
Whoa. I don't want that to happen, but that's where all the money's being made.
That's where all the money's being made.
If you go out into the ocean and risk swimming to Korea to see where Samsung is, maybe ride the Kraken and do some investing in Samsung because they're doing excellent work.
Excellent work. Is there any other big stories that happened this week?
Were there any other big stories?
Massive stories.
There were no massive stories, but there are other stories. Would you like to hear other stories?
Weave your tale.
Yeah, okay. So you'll sit on my knee and I'll tell you this. That's how my kids do it. Okay, so Anthony's on my knee. We're going to talk about Apple.
Apple.
You like Apple?
I love Apple.
So Apple halved their iPhone X Q1 production to 20 million units. So they're cutting back on the iPhone X production a little bit. I don't think it's necessarily so much that they're cutting back on that as that they sold a lot. They really pushed to get it out when it came out. They gave it a bit of a delay from the iPhone 8 and the iPhone 8 Plus. I think what happened is they ended up selling so many around the Christmas season. It's just time to like not get so many ready to go. We know they're going to do a transition over to LG as their display guys.
That's right.
That's going to happen sometime this year. Why have a whole bunch of backlog stuff that's made by Samsung if you could get in with a company that's already going to be doing a lot of the work for you that you bought a lot of the equipment for? So once LG gets online, that might be a reason why there's a bit of a pullback, but 20 million units, so they have the production there. The lower priced iPhone 7s, the 8 Plus will all remain at the same production pace. So just the X had a bit of a production pullback.
Oh, pullback, yes.
The European Union antitrust investigators extended the Bayer and Monsanto takeover bid investigation by 5 days. So just some more bureaucracy before two giant companies get together, right? Bayer, major drug company, obviously Monsanto, the seed company that of all seed companies.
Oh,
there's nobody making genetically modified corn like Monsanto.
No.
So the European Union is just checking to see what kind of monstrosity the two of these companies are going to come up with and okay it, because ultimately it's probably going to fight the Kraken on pay-per-view.
I'm sure it is.
It probably will. India GDP. India's GDP growth is expected at 7 to 7.5% for the fiscal year of 2018 to 2019. Their fiscal year for India starts April 1st, 2018. With their reliance on fuel importing being their biggest economical risk, as long as fuel doesn't go up past where it's sitting right now, still at about what's fuel at? We didn't look at fuel. Fuel was 64.82 to close the week. WTI crude, and just because we didn't mention gold, 13.32, both around the same price they were last week when we talked about it. That's exactly kind of what I thought they were going to be. Like I said, I think fuel's kind of around that price, going to sit there for a while. As long as fuel doesn't jump up too much on India, 7 to 7.5 GDP growth. That is significant growth over in the country of India, and that's after telling Bitcoin and cryptocurrency to get out of India. We are not. You get out. No shirt, no shoes, no service is how that worked. Jamie Dimon at JP Morgan Chase. We talked about JP Morgan and Berkshire getting together on this deal to give their employees some healthcare benefits to lower some costs for them. JP Morgan Chase staying on as CEO of JP Morgan for 5 more years. Probably the best CEO in the financial field. Maybe Lloyd Blankfein over at Goldman Sachs. One of the two. It's one of the two. I love those guys. They're buddies. Both those guys started the same year before the financial crisis. Both really good CEOs. Just run excellent banks. Two totally different type of banks, though. Tesla. Home Depot and Tesla have got together. Tesla is going to have a little booth inside of Home Depot's showing off their solar panels. So there's going to actually be a Tesla representative working inside the Home Depot that's going to show all the Tesla solar stuff for your homes that you can buy and have set up. So I just thought that was pretty easy. It's a good way for Tesla without a real retail space to get out there and touch base with consumers. What better way to do it than through Home Depot? You got a lot of Home Depots to choose from, a lot of traffic, obviously the best player in the space.
Oh, for
Home Depot. Tesla trying to get out to people, and this is a good way to do it, I think. Take-Two delays Red Dead Redemption 2. That happened late in the week after they had a pretty good bump. We had video game stocks up. EA, Activision, Blizzard, and Take-Two Interactive all hit record highs on Wednesday. Take-Two Interactive took a big bump on Thursday as they delayed Red Dead Redemption 2 for the second time, I believe. Second delay.
Yeah, that is.
Xerox and Fuji Film are merging. The printing company and the film company merging. There's a Fuji Film takeover. They had a record profit year. Carl Icahn selling 1.16 million shares of Xerox over the last couple of days. But Carl Icahn and his team still own 23.6 million shares of Xerox overall. So they're going to become one of the main owners of this Fuji Xerox company that's going to end up merging together. It's going to be Fujifilm taking over Xerox. Verizon drops plans to carry smartphones from Chinese phone giant Huawei. Is it Huawei or Hui? It's one of the two. It's one of the two because we'll never know because they don't come over to North America.
No, they don't.
These phones are the second biggest selling phones, smartphones.
That's right,
they're higher selling than Apple. They're the second highest selling smartphone in the world. But nobody over here carries them. AT&T a month ago was going to carry them, be the first carrier to bring them here. No dice, under government pressure. Verizon going to be the second carrier to bring them here. No dice, under government pressure. I guess just far too much worry that there's spying devices involved in their phone.
For sure. You think so?
Because they're in the cahoots with the Chinese government, right?
Yeah.
They're out of pocket. They're getting paid out of hip pocket. They're supposed to be a good phone. They're well-reviewed phones. They're supposed to be really, really good phones. But we're never going to find out.
Never will, no.
The Justice Department or the Department of Defense or whoever it is that's getting in AT&T and Verizon's ears have just said, it's not happening.
No.
I don't care how good
What
these
if you
phones
just
are.
buy one, import it, then put your SIM card or whatever?
You might be able to. I wonder if you could get them off of eBay.
Why would you want to though? If there is spyware in it.
Maybe I want to be spied on. I don't feel like I have enough attention.
Could you get tried as a spy? Then?
I want to be. I don't want to just be. I don't want to be locally famous or YouTube famous. I want to be internationally famous. I want the Chinese to be like, we love this guy. We've been spying on this guy forever. You should see the pictures he puts on this phone. Alphabet, biggest intraday drop in 2 years. With Q4 profit miss on Thursday. So, that was one of the things I thought that was really going to set things off for Friday to be a down day was Alphabet missed. It was a pretty considerable EPS miss for Google. And I didn't see much in Google's transcript, their earnings call, that really jumped out at me. There was a lot of talking. There was a lot of talking. There was not a lot of information. The earnings call just didn't move me from a company like Google.
Right.
I expect a lot more. I expect to hear about innovation. I expect to hear about, all these undiscovered lands that Google's taking things to.
Yeah.
And it was really kind of a tepid call that was about, the HomePod or the Google Home. Yeah. And it was about YouTube. It wasn't really about it, and it showed. The market put a pretty good correction on them. They had the biggest, like I said, the biggest intraday drop in 2 years. It was a pretty big for them. Pretty good correction going into the weekend. AT&T and Time Warner and the Justice Department are going at it. March 19th,
again, huh?
Throwdown time. Well, no, they had pre-trial this week, but the throwdown is March 19th. It's go time. Are they going to get this merger done? $85 billion on the docket. AT&T and Time Warner and the Justice Department, they're going to court. And we're going to find out. And this might be we had Time Warner earnings this week. This might be the last quarter that Time Warner is actually reporting earnings without being an actual part of AT&T. Because
that's going to be interesting.
This is the last line of defense, right?
Yep.
If the Justice Department says that it's a go.
It's a go then.
And I would imagine, but it's this trial judge. He even said he doesn't think they're going to get it done, the trial done by the deadline date that they have with the SEC. So
there's a lot to look into.
There's a lot of stuff going on with this, but it seems like a natural merger. Even these sectors, like we said a month ago, these sectors are merging. The media and telecom sectors are merging on the S&P at the end of this year, right? Those sectors are going to become one sector.
Yeah.
It's only a natural fit that these companies get together. They don't have enough market share. I know AT&T's got big telecom share, but Time Warner and AT&T put together don't have enough media market share to really say that there's anybody encroaching on a monopoly. So I don't know why we don't just get this done. $85 billion, it seems like a good deal for the shareholders, even though Time Warner keeps coming out they had a great quarter this quarter. Homebuilders down 9 straight days as mortgage prices rise. Like we said, 4.41% was the 30-year. That's up 3 weeks in a row. And the homebuilders continue to take a beat down, even though earnings this week from Pultegroup, from KB, it was good. They were good earnings, but it wasn't enough. So we'll have to see next week. I think there's Beazer next week. We're going to get more earnings from more home builders. The home building keeps coming out good. The mortgage applications and stuff this week weren't the greatest apps I've seen, but they were decent enough. But it was still it's that mortgage rate continuing to go up, and that ultimately costs people a lot more money. So I hope people are prepared, because we're living in La La Land. We're living in still an underfunded, low interest rate Narnia. It's not supposed to be like this. It's never like this. Historically, this is the 4th time I've used that, but I'm telling you, historically, it's not like this. We've been doing this for so long, for a decade now. People think this is the norm. Interest rates, mortgage rates, these things are going to go up. I hope you've got your money allocated for when this kind of stuff happens, because there's going to be a significant bump in your monthly allocation to your budgeted expenses, where you're going to have to go everything went up $70, $40. Where's that money coming from, right? And we've done videos on budgeting.
We have.
We've done videos on budgeting. So get your budgeting act together. Walmart, rumors of taking over Blue Apron. Do you know what Blue Apron is, sir?
No, I do not.
Blue Apron is a company that brings food to your house, sends you food through the mail, pre-made food. It's supposed to be pretty good.
Really? Okay.
A podcast that I listen to, much like our podcast that I also listen to. Our podcast I listen to, it's one of their sponsors, and I kind of was following it ever since they went IPO a little while ago. They don't have the greatest earnings calls. It's not the great, but partnership with Walmart could really change that.
Oh, definitely,
because it's supposed to be really, really good food. So if they could get their costs down and get their shipping more efficient and stuff like that, and with teaming up with Walmart could really help get a lot of those pipelines out there.
Oh, definitely.
Could see a company like Blue Apron really take off from they're like a $5 company right now. Mattel, bad earnings.
Bad.
Wow. Were these earnings bad? Mattel still with analysts came out and said that they could see Mattel potentially bouncing back in 2018 because of the earnings being so bad, the industry being so bad, the American Girls brand being down, Fisher Price being down, there's a failed merger acquisition stuff with Hasbro. They could see the Mattel team bouncing back, is what analysts said on Friday. After Mattel had bad earnings, terrible, lost money earnings earlier in the week. And for some reason, Mattel on Friday bounced back 8%. Don't ask me why. Don't ask me why. This company is coming apart at the seams.
Seems like it.
Don't ask me why. Why in a day when everything else was down, Mattel would be up 8% is beyond me.
Kind of baffling. Since, they've been down.
Terribly
down, yeah.
It's a brutal earnings call. Airbnb, the CEO, Brian Chesky, came out and said, expect no IPO from Airbnb in 2018. So there you go, Airbnb, growing company. I've heard good reviews from Airbnb. Have you traveled recently and used Airbnb?
Not recently, no.
I don't know of you traveling.
No.
You've been pretty much in lockstep with me over the last 3 years, and I don't remember you going anywhere. If you do, I've heard good things about Airbnb. It's a good way to book sleeping at other people's houses. If you really like... I
don't know if I really want to do that.
Everybody's house has a different aroma.
Aroma, vibe.
Yeah.
You don't know whose house you're sleeping at.
Well, I think these houses, they must get some sort of review.
You think so?
I would hope so.
Yeah,
or maybe that's why they're not going IPO yet. Maybe the review process is still a little touch and go. Yeah, people still end up at serial killers' houses.
That's what I'd be worried about. Like them sending up a video or watching me sleep, just like breathe. Yeah, nothing.
Again, I'm kind of into that. I'll get a Hawaii phone and just go to Airbnb and have people watch me sleep. I'm good with that.
At least you have the Chinese government watching your back.
Yeah, that's right. See, I got my homies over in China. They love me. That's why. No problem. Boeing, they've got a little bit of production issues with the 747 Jumbo. They're just not making enough of them. They've only got enough to sell over the next couple of years for actual production. They finally got an order by UPS for 14 total of $5.65 billion. That's going to give 2 more years of output at 6 jets per year for the building of the 747 Jumbos. 11 out of the last 12 orders for 747 Jumbos have been from UPS. So UPS, United Parcel Service, they love it.
Stealing all the planes.
They love this jumbo.
Yeah.
They gotta have that jumbo.
They gotta
have that jumbo. Lockheed Martin started production on the Orion spaceship that is gonna take man back to the moon. We're going back to the moon. Is that exciting for you?
That is.
Is it?
Yeah, a little bit.
It's more exciting for you. You're into space.
I am. It's cool.
We're going to the moon.
We're going to the moon.
Lockheed Martin is going to the moon. They've got the missile power to blow it up if they want.
Oh, definitely. They definitely do. I like Raytheon. I think Raytheon's such a better name than Lockheed.
Yeah, they're not going to the moon.
They're not going to the moon, but what a name.
They should team up.
They should definitely...
Missile systems.
Oh.
What a division to have in your company. Missile systems.
If I own a company, like a big corporation, there has to be a...
I think I would give divisions just fun names, even if they didn't do anything with missile systems. Just call it missile systems.
But wouldn't the government look into it? Like, okay, why do you got like missile systems?
Why are you making cupcakes, calling it missile systems?
Yeah, exactly. What's going on here?
You're like, because cupcakes were just too boring.
Yeah,
it made me sound like a bit of a Nancy. But this here now I feel like a tough guy. My missile systems.
Well, it's that time again, ladies and gentlemen. We got earnings.
So we're done?
Oh yeah, we're done with the headlines. Well, the big stories are done. We're earnings now.
Earnings?
Oh, earnings.
What are earnings?
Earnings happen every, let's say, a couple months here.
3 months?
3 months.
Yeah, it's roughly.
Companies come by, tell them how they did,
They
for
did
that
okay?
quarter. Did pretty decent. There was a couple, but for being in a down market.
Well, we're down market this week. Let's not
Just as-
call,
oh, I
let's
get-
not
yeah,
call it a down
Yeah,
market.
that's right. Just this week.
Come on, Tricep.
Well, for the 15-month high. To now,
Yeah,
it's
no,
kinda your-
it's okay.
what I mean.
Yeah, well, the earnings this week kind of, I think, we were looking for pristine earnings. They weren't pristine. I think they ended up probably bringing things
Yeah.
down slightly, but it just wasn't. It wasn't more than the fact the market was just ready to have a bit of a pullback.
Yeah.
So I mean, earnings were good. I thought earnings were positive. Okay, so who are we getting earnings from?
Well, a couple of them are such as Apple, Amazon, Microsoft, Alibaba, U.S. Steel, Facebook, Boeing, and many, many, many more.
You did a good job reading that list you wrote earlier.
Thank you.
That was a good job.
Thank you very much.
I'm proud of you.
I'm proud of myself. I
You're
made it through that
You're doing a good
list.
job. You read that whole thing.
I know.
I didn't think
Surprised.
you were going to be able to do that.
Oh,
I can't read any of those words.
Oh no, it's
Those
just
look like hieroglyphs
chicken
over
scratch.
there.
Oh,
Yeah,
I know.
absolutely. Okay, earnings.
Earnings!
I'm getting into earnings. You shut your mouth. Lockheed Martin, who we just talked about, that's going to space, right?
Going to space.
Going to space with Orion. Earnings per share of $4.30. Beat the street by 23 cents. Revenue of $15.14 billion. Beat the street by $410 million. That revenue number is up 10.1% year over year. Lockheed Martin closed the week at $352.66. Price to earnings of $51.63. That's a trailing price to earnings. All these price to earnings are going to be trailing price to earnings. I like to give the price to earnings just so you can see roughly the comparison, but obviously forward price to earnings is going to be a much more indicative of where you see things going in the future if guidance between analysts and the companies hold up to be anything remotely close to the truth.
Right.
So trailing price to earnings when I give price to earnings. So some of the highlights from Lockheed Martin's earnings call: $1.9 billion net charge due to new tax reform. This is a one-time charge, so you see Lockheed Martin have to pay out a little bit of money here. Aeronautics division up 12%. Missiles and fire control up 31%. I imagine fire control is giant water spraying robots
sure
or something. Yeah, sweet stuff. Rotary and mission systems. Man, it sounds dangerous at Lockheed Martin. Up 14%, and space systems down 12%. I hope those weren't important space systems because they're just about to go to the moon. They got a record backlog of $100 billion at the end of 2017. So a little bit of business for Lockheed to get done.
A little bit.
So if you're concerned about that trailing price to earnings being 51, you can rest assured that there's still some stuff to keep the lights on.
Definitely.
Going on in the
For
future
sure.
if the moon wasn't enough to keep the lights on. Seagate Technology. Earnings per share of $1.48, beat the street by 13 cents. Revenues of $2.91 billion. That beat the street by 50 million. That number's only up 0.7% year over year. Seagate closed the week at 51.77. Trailing price to earnings of 23.53. Capital expenditures set for $120 million, roughly 5% of their total revenue. They expect normal sequential seasonal decline of 5 to 7% in this quarter. Seagate Technologies, middle of the pack runner. I would not run with it. This is definitely one of the earnings calls that goes to show that even when a market is ripping, there are companies that can fall way, way behind their competitors. EA, this is what we were talking about earlier. EA had, earnings per share of negative 60 cents versus a $2.19 estimate. There was a $186 million loss, and there was $176 million allocated to tax reform. So they ate it in this quarter. They were still up. They were up on Wednesday. There was a pullback a little bit, but I mean, EA, they ate it. They took it on the nose. They knew there were a couple of things that were going to end up being a problem, and so they were like, "Yo, it's happening now.
Yeah.
Here it is.
Deal with it.
You want 219? How about negative 60 cents, buddy?" Revenues of $1.97 billion. That was off too, missed by 40 million, and revenues are down 4.8% year over year. EA closed the week at $124.53. That trailing price to earnings is $38.92. I don't know if that's necessarily high in the video game industry or not with the growth potential
Right.
that's there. That might not be that high. Digital revenue up 14%. Packed goods revenue down 18% as obviously digital downloads start to take over. EA has a lot of good stuff on the horizon to buy into this with the way the video game industry is going as a whole. I'm not entirely sure if I would. This wouldn't be a buy signal for me, but EA definitely is. It's one of the companies that I'm still keeping my eyes firmly locked on. That industry as a whole is something that I'm keeping my eyes firmly locked on. I think there's growth there, and I think the growth is going to run for a decade.
Oh, easily.
I think that market is going to become I think that's going to be the next sport that you see on television. That's going to be the next sport that's going to be on mainstream media. Wherever we get media from in the future, esports is the next sport. That's the next one. The eyes are already there. The YouTube numbers prove it. The money's already there. You look at the companies invested in it. Once these kids, these crazy dexterous little 12-year-olds that are talking mad business to you in a Call of Duty chat room, once these kids find out they can make $100,000 plus a year just laying waste on Call of Duty, they're going to spend even more time doing it than they already do. Esports, mark my words. Alumna, a genetics company, a company that does all sorts of stuff with genetics, genetic profiling, all sorts of good stuff where it comes to your DNA. Earnings per share of $1.44, beat the street by 22 cents. Revenues of $778 million, beat the street by 27.76 million. That revenue number up 25.6% year over year. $220.18 to close the week. $44.74 is a trailing price to earnings. I mentioned Alumna only because we talked about that Luna coin in a video a little while ago, and the fact that they're in on the cryptocurrency thing. I thought that was kind of interesting. I just want to take a look at their earnings. I haven't really looked at their company from much of a standpoint at all, to be honest with you. It's kind of far out of the realm of things that I understand. I don't really know where genetics and the DNA profiling is going to go, more so than to build a database that you're just going to sell to pharmaceutical companies anyways. I'm sure most pharmaceutical companies are building their own databases at this point, but Alumna, definitely one of the companies that's one of the front runners in that business if you want to hedge and believe that they're either going to get bought out when they get a big enough database by one of the large pharmaceutical companies, or they're going to be a feeder system to all pharmaceutical companies. So Alumna, pretty decent earnings call. AMD, Advanced Micro Devices, earnings per share of 8 cents, beat the street by 3 cents, revenues of $1.4 billion, beat the street by 70 million. That revenue number up 33.3% year over year. AMD trading at $12.45 with a price to earnings of 415. So you are way overpriced there, my friend. Computing and graphics up 60% year over year, with the Radeon and Ryzen sales going up. Enterprise, embedded, and semi-custom only up 3% year over year. AMD was lagging way down the floor. Are you yawning? Are you yawning while I'm doing earnings?
No, I'm not.
Triceps, you better step it up. This is page 1 of 7, buddy.
I know, I got
We're
this.
going deep into earnings, and I mean deep. Yeah, AMD, overpriced. I mean, it's overpriced. They're one of the laggards, like I said, that have been pulled up with the tide. Overpriced.
Way overpriced.
Way overpriced. Do not invest in AMD, even though the earnings call was good. Can you handle more?
I got this.
You want to go to sleep?
No.
Should we pause this and I could maybe we could let you have a little blankie time? Yeah, you could have a bottle.
Right?
Yeah, intermission.
There we go.
Why not? I'll have a drink of my Zions here.
And I'll have a little...
Not our sponsor, but could be Zions. Just saying.
Yeah, I'll take a little nap.
I like how you just said, pay me. I don't even want your product. Just pay me. Send me the cash, bro. You're good?
I'm good.
You're good?
Let's do this.
Okay, so Cannimed, that got bought out by Aurora last week, reported their full year. So, again, speculative market, right? Down 28 cents. Negative 28 cents was the earnings per share. Losing money. Currently, the stock's trading at $20.92. That earnings per share number is up 60% year over year, so they're making improvements. The revenue number is $16.69 million. It's peanuts. It's peanuts to be worth $20 a share. It'd be worth $16.69 million. It's ridiculous. That revenue number is up 70.3% year over year, but still. Revenue per $10 gram was up 3.5%. 2.1 million grams produced this year. That was up 37.7%. And 1.6 million grams sold. That's up 74%. So they're selling the dope.
They are.
They're not having a problem growing dope, selling dope. They're making better margins on $10 grams. Like, hey, if you're selling $10 grams, you're doing pretty good, right? Like,
right,
normally people are cutting prices on that
I know.
$10 grams, but it's still so overpriced. The company is still so overpriced that a merger with Aurora, stay by yourself until we find out just how much market you can get into. I don't really care that you improve margins on your $10 gram by 3.5%. That just ain't enough. It's not enough to constitute the valuation that you have. So, yeah, Cannimed, there's the full year. Aetna, soon to be a part of CVS if everything goes through. EPS of $1.25 beat the street by 5 cents. Revenues of $14.85 billion beat the street by $20 million. That number is down 5.6% year over year. $185 to close the week. Trailing priced earnings of $34.26. CVS and Aetna have received a request for more information regarding their merger from the Department of Justice. That's the story.
That's the story.
That's the story. Aetna, we know what Aetna does, right? They
do
all sorts of healthcare insurance, and they've got 40 million, 45 million,
something like that,
people that are a part of their healthcare plans. They're going to get a lot of people that are going to join over to CVS, and they're going to get a lot of discounts over at CVS for pharmaceuticals and stuff. Yeah, absolutely. So once this goes through, Aetna got a good premium. CVS paid a good premium for Aetna. Was over $100 a share, I believe, right?
I think it was something like that.
Yeah. So I mean, it's a good deal. Aetna's a good company. I thought this was down 5.6% revenue. Again, am I jumping all over this to be invested in? I would like to see this deal close before I get. And it's supposed to be second half 2018 is when this deal is supposed to close with CVS. As long as the Department of Justice seems like they're satiated with everything they find out. So I wouldn't jump into anything till everything was settled.
Right. Yeah.
I wouldn't get in now in the mix. Right. Like I'd let everything settle. But Aetna, good company, good earnings call. Pultegroup, one of the home builders that's perpetually down here because we're seeing the 30-year mortgage go up. Earnings per share of 85 cents was in line. Revenues of $2.79 billion, missed the street by $30 million, but it's up 12% year over year. Closed the week at $30.70, and trailing price earnings of $21.32. The Homebuilders, I think, are doing just fine. New home orders up 14%. Home values up 22%. Backlogs up 21%, up to $2 billion with a up 35% value on those backlogs. Pultegroup, one of the main home builders in the country, doing excellent work. It's not their fault. The 30 years going up, it's going to go up. You're going to have that, but the economy's going up and people have money. They're going to continue to buy homes.
Exactly,
home builders can't get smashed for no reason. They're getting smashed. They're getting handed it like for weeks now. They had good earnings. Like the Pultegroup's earnings are fantastic. We got another earnings. I'm pretty sure it's KB in here, and KB is fantastic earnings too. So for people to not be giving these companies the credit, like they're not even overpriced. You look at their trailing price to earnings and they're like right on the money, right? So I can only imagine forward price to earnings are probably phenomenal. You got all these backlogs. The money's there. The economy's good.
Oh yeah.
They're gonna pay those mortgage rates. They're gonna have to. Everybody's gonna pay those mortgage rates. Everybody has a mortgage. Pfizer, earnings per share, the blue pill, the makers of the blue pill. You can get generic ones that are cheaper.
That's right now.
Yeah. I know a guy.
Knows a guy.
I know a guy that knows a compound pharmacist. EPS of 62 cents, beat the street by 6 cents. Revenues of $13.7 billion, beat the street by $20 million. That number is up 0.5% in revenue year over year. Pfizer $36.61 to close the week. Earnings or price to earnings, trailing price to earnings $10.43. $10.43, really low for the pharmaceutical industry. Innovative Health, 6.4% increase. Essential Health, down 7.1%. Some of the divisions. Internal Medicine, up 6%. Vaccines, up 8%. Oncology, up 11%. Inflammation and Immunology, up 8%. Rare Disease, up to $603 million. Consumer Healthcare to $950 million. Pfizer just does not have enough new drugs. I think that's my big concern with Pfizer,
Right.
is they're just not that pipeline-heavy pharmaceutical company that they used to be. Harley Davidson earnings per share of 5 cents. The estimate was for 46 cents. Revenues of just over $1 billion, beat the street by 40 million. That revenue number is up 12.5% year over year. $47.50 for a share of Harley Davidson, priced earnings of $15.99. People are not buying motorcycles. They're just not. So, I mean,
No.
the idea is that Harley's probably going to get bought out. That somebody's going to buy Harley and bring. I mean, that's a 120-year-old brand, right? Somebody's gonna have to pick it up because sales are down. Like when you look at unit sales, they're down every quarter. Every quarter, it's a recurring down number, which means the trend, even with money being out in the economy, the trend just is there's not as many people that are interested either in your brand or motorcycling in general.
Yeah.
And one of the two, and it's a trend that's continued from bad economic periods to good economic periods. I think it's more to do with that market space than it has to do with money being available to spend it. Harley Davidson continues to have quarters that are unimpressive. McDonald's earnings per share of $1.71 beat the street by 12 cents. Revenues of $5.34 billion beat the street by 110 million, but that revenue number down 11.4%. I don't know if that has to do with their bigger emphasis on the value meals, the dollar value meals.
Right.
It might have a little bit to do with that. McDonald's share price $169.38. Trailing price to earnings of $26.63. Same store sales up 5.5%. That is excellent. Total sales up 8%. They're opening over 1,000 new stores and positive growth in all regions for McDonald's.
Good for them.
Yeah, it's McDonald's, right? Honestly, are you going to find better fast food?
Probably not.
On a case-by-case basis, if you went to every McDonald's anywhere in the world, you're probably going to find the best quality controlled fast food at McDonald's. Have you seen the movie The Founder with Michael Keaton? He plays Ray Kroc, the guy who ran McDonald's.
No, but you told me about it.
Excellent movie. Michael Keaton kills it. Great, interesting, even though it's a slow movie about business. It's about one guy's, the way he got to the top. The way they all get to the top, which is by stepping on a few toes and a few hands and whatever. It is what it is, but it's a great movie. Continuing on with earnings, Eli Lilly, big pharmaceutical company, earnings per share of $1.14, beat the street by 7 cents. Revenues of $6.16 billion, beat the street by 220 million. That revenue number is up 6.19%. Eli Lilly closed the week at 81.18. Some of the big drugs that they sell: Humalog down 5%, Cialis almost as good as the blue pill, lasts a little longer, not as potent, down 12%. Cymbalta up 6%. You didn't even react to my Cialis reference there. You don't even care. You don't have a brand loyalty.
No,
I like Pfizer's blue pill. It's got more bang for the buck.
More bang for the buck.
It shows up at high noon. It's ready to go. It's go time. Cialis is a little more tame. Tame. Need to play the flute to get the snake out of the basket still. D.R. Horton earnings per share, another good home builder earnings call, like I was saying. Earnings per share of 49 cents. That was in line with the street. Revenues of $3.33 billion. Beat the street by 70 million, and that revenue number up 14.8% year over year. 46.37 they're trading at. Trailing price to earnings of $15.68 only. Net sales orders up 16% and up 17% in volume. I don't know why the home builders are having such a tough time. I don't know why the market is blaming home builders for the mortgage rates.
I don't know why.
Like, I know it's going to impact them slightly, but it's not. Yeah. It's not going to destroy them. The economy's good. It's going to hold it. The home builders are doing good. I look forward to seeing like Beezer next week. Boeing. Here's one of the big boys. You asked for Boeing earlier. $4.80. Beat the street by $1.91. How do you like that EPS beat? Beat it by $1.91.
Not too shabby.
Like, that's like foot on your throat, analysts. Like, you're not even looking at what my company's doing. $4.80. Beat it by $1.91. $25.4 billion. Beat that number by $710 million. And that revenue number is up 9.1% year over year. Boeing is trading at $348.91. This was trading in the hundreds last year. Trailing price to earnings $25.90 still. Tough to tell you, it's still not a good investment.
Yeah.
It runs its industry. There's not even anybody that's playing in the ball game. They're not playing the same sport, different whole thing, right? Commercial airplanes up 8%, defense, space, and security up 5%, global services up 17%, a backlog. What did we mention before for a backlog? Who had a big backlog that we were just talking about?
Wasn't it Boeing?
No. We just mentioned somebody. Backlog of $2 billion there for Pultegroup. There was a really decent backlog somebody had. Lockheed Martin.
That's right.
Record backlog. Lockheed Martin's going to take man to the moon.
They are.
Lockheed Martin has a division called Missiles and Fire Control. That's what you do when you fight Cobra.
Or Godzilla.
And they've got Godzilla, and they have a backlog of $100 billion. $100 billion.
Yeah, that's quite a bit.
Boeing has a backlog of $488 billion.
Holy.
You want to talk about running with the winners?
Yeah, definitely. Yeah, they're way out in front.
Boeing's not going to the moon.
No.
They're already there, building planes to go to Saturn. Boeing backlog $488 billion. That's work for a generation. That's including 5,864 commercial planes.
Holy.
Almost 6,000 commercial planes in the backlog. Boeing continues to grow. Man, were they overpriced or underpriced in 2016.
Weren't they ever?
People just could not see the forest for the trees.
No.
Boeing is still roaring. They were down a little bit at the end of the week, but they're roaring. Qualcomm, earnings per share of 98 cents, beat the street by 7 cents, revenue of $6 billion, beat the street by $70 million, revenue only up 0.2%. As we know, they are the semiconductor laggard in the last year with all sorts of licensing and legal issues and all sorts of stuff. 66.07 is what they're trading at. Some of their divisions, QCT up 13%, EBT up 32%, and MSM chip shipments up 9%. Qualcomm could probably use to become a Broadcom. If Qualcomm and Broadcom got together like they should, that would be the biggest tech merger ever, and it would fix a lot of the Qualcomm problems. Shareholders are getting a premium.
Yeah.
Qualcomm, while things are up, the company as a whole just doesn't seem like it's really able to get that business rolling again. They got just jammed up with a bunch of problems, and they got out of the loop. They're out of the mix. They're just not in it. The Snapdragon and stuff was supposed to take them over to the next level, and it just seems like too much stuff just bogged them down.
Yeah.
And now they're the laggard in an industry that it looked like they were going to potentially be the leader in. And they're the laggard. Last year, when you look at the index, they're the only company that was flat. Everybody else in the semiconductor index way, way out in front. Mondelez, earlier mentioned as being a part of the deal between Keurig and Dr.Pepper Snapple. Mondelez, formerly Kraft, EPS 57 cents, beat the street by a penny. Revenues of $6.97 billion was in line, up 3% year over year. 45.50 is what they're trading at the end of the week, trailing price to earnings of 23.82.
More earnings, huh?
Carrying right along. This is nothing to me. I don't know if it is to you. This is nothing. These numbers all come out like a beautiful mind, my friend. I'm retaining all of this. This is not one issue, even a little bit. I love it. I love it. If you don't do this, if you don't relish in this, if you can't take all these things and put them, compartmentalize them into where they belong, and then utilize the information you need based on what your investments are or what you're prospecting to do for investing, you just aren't going to get the big picture. The earnings calls are vitally important. There's a reason I go over this. And if you're doing any kind of investing, you need to go into these earnings calls way deeper than I do. Like, I read the depth of a lot of these big companies' earnings calls, like a Boeing or Facebook that we're going to talk about here. I go into these, go a lot deeper, but I'm just giving you bullet points. You're just getting the headlines. I'm doing better than CNBC or Bloomberg, who just give you the top and bottom line numbers. I'm giving you some bullet points. But if you're doing investing, you better love this stuff, you better get deeper in it. I love it. Let's carry on with earnings. Earnings from Facebook, EPS of $2.21, beat the street by 26 cents. Revenues of $12.97 billion, beat the street by $420 million. That revenue number for Facebook is up 47.2% year over year. 47% revenue increase. Do you think Facebook has learned how to monetize? I think they're getting it. $190.28 a share, trailing price to earnings of $35.30. User time on Facebook is down 50 million hours a day across the Facebook platform. So people using it a lot less, but ad revenue is up 48%. How long are advertisers going to continue to pay to advertise on Facebook if the user time continues to go down? Because active users went up 14%. Daily active users are up. Monthly active users are up. But it just means people are using the platform a lot less overall.
Yeah.
How long does ad revenue continue to climb? Because ad revenue is what's pushing that revenue number
definitely.
so dramatically. There's no other way that Facebook's monetized.
No.
It's ad revenue or it's nothing. User time down is not a good sign. Facebook wants to keep eyes active on their platform specifically. Microsoft, earnings per share of 96 cents, beat the street by 9 cents. Revenues of $28.9 billion, beat the street by $510 million. That revenue number is up 12% year over year. Microsoft closed the week at $91.78, a $62.86 trailing price to earnings, but Microsoft's divisions are all up amazingly well. Productivity and business processes up 24%. Office 365 revenue up 41%. Intelligent cloud revenue up 15%, with 98% of that revenue being made up by Azure. Personal computing even up 2%, and they said the personal computer was dead. Microsoft's Surface Pro is awesome. Have you seen that thing?
Oh, yeah.
The like tablet, laptop. Like, I know there's a bunch of generations of them now. I need a laptop. My kids use a laptop. My wife uses a laptop. Yeah. My laptop this week, good laptop, few years old, bricked it.
Rest in peace.
It's done. It is dead.
Done.
Anything good on that laptop is landfill material. Off to the dump donkey.
Yeah, off to the dump donkey, right.
the landfill monster. Yeah, so I need a new computer. Personal computing up 2% over at Microsoft, those Surface Pros. Just saying. Yeah. They're expensive, though.
Oh, they are.
They are pricey, but I am...
Nice.
Oof.
So nice.
Ooh. Might have to get me one. AT&T, earnings per share of 78 cents, beat the street by 13 cents. Revenues of $41.7 billion, beat the street by $510 million. That number is down 0.3% year over year. AT&T trading at $38.07. That trailing price to earnings is only 8. They added 300,000 video net adds, 4.1 million wireless net adds, business solutions up 2%, consumer mobility down 1.7%, their entertainment group down 3.5%, international up 16%. AT&T looking to get this merger with Time Warner done and branch this business out a little more. They're just basically net add or net subtract video users and wireless users. It's a boring company that's worth a lot of money but just doesn't make a lot of money. The margins are tepidly low.
Well, hopefully this deal goes through. It'd be nice to see what happens there.
I'd like to see AT&T get their hands on more original content, see what they can actually do with that, right? And Time Warner, you obviously then get it in there, and it's a business that's hedged in a lot more directions. They're not so reliant on what the Justice League does at the theaters or whatever, right?
Yeah.
PayPal, because AT&T obviously a much more reliable, steady business as opposed to a media-driven business.
Right.
It's a lot harder to predict the media, much easier to predict AT&T, but AT&T is boring and predictable, means there's not enough volatility to make real money in it. PayPal EPS of 55 cents, beat the street by 3 cents. Revenues of $3.75 billion, beat the street by $120 million. That revenue number up 25.8% year over year. PayPal closes a week at $76.57, a $52.09 trailing price to earnings. Payment volume up 32%. Merchant services up 36%. eBay volume up 10%. They're doing more transactions over at eBay, and person-to-person volume up 50%, which means PayPal's involved in even more transactions just between me and you without eBay or any other merchant being involved whatsoever. I'm getting pretty good at talking really fast. I think I could be an auctioneer.
Oh, that's pretty impressive.
That Do I see 100 over here, 100 over here? I can do this. I think you can. Moving right along from PayPal, we look at their brethren in crime, eBay. EPS of 59 cents in line. Revenues of $2.61 billion in line. Good job, analysts. That is some good work there. That revenue number is up 8.8% year over year. eBay closed the week at 4430. Global active buyers up 5% to 170 million. Gross merchandising volume up 10%. PayPal grows. eBay grows. They are a match made in heaven. Formerly one business, two strong businesses on their own now. Yeah, doing very, very well. eBay and PayPal charge high fees, though.
They do.
The fees are killer. Like, it is not like Amazon. Like, I understand eBay has a much more robust marketplace because you get all this old stuff.
Yeah,
I'm not going to find old Ghostbusters on Amazon.
No, you're not.
It's just not going to happen. But the fees are destructive. And PayPal's currency conversion to go from American to Canadian or vice versa, if you sell or buy from somebody that just listed something in a... Like, they listed it in American, but you can see the Canadian price. Like, PayPal and eBay do the conversion, like the numbered conversion right there for you.
They do,
but then they charge you. They charge you like a bank having to do like actual like physical currency conversion.
Well, they're not actually doing that.
It's going into an international bank.
Yeah.
Come on. Lower the fees. Like, that's... PayPal always gets me with that. Like, it's a great company, but man, the fees are exorbitant. Like,
that's how they make their money.
They're greasing you. Yeah, it is, because I guess they don't have. There's no retail banking. They're not doing any investment banking. They're just very convenient for those internet transactions.
That's true. Yeah, very convenient.
But they grease you. Woo! It's greasy. U.S. Steel. Do you know what they make? They make steel from the U.S.
I was gonna think bread.
It is bread, actually. You're actually 100% right. You know so much more than I do. EPS of 76 cents for these steel makers. That beat the street by 9 cents. Revenues of $3.13 billion. That is a lot of steel.
That is.
That's a lot of bread for a lot of steel. That beat the street by 30 million. That number is up 18.2% year over year. U.S. Steel closed the week at $34.58. Trailing price to earnings of $15.86. Woo! We're moving on.
Good going, Steel.
I've got the soul of Ric Flair alive in me. The Nature Boy.
Why? He's not dead yet.
It doesn't matter. He's my spirit animal.
Oh,
get off my back.
Okay, sorry.
What are you judging me about?
I'm judging.
Jeez.
Carry on.
I'm ripping through earnings here. I'm giving you the goods. I'm telling you what happened in the international economic markets last week.
And you're doing one heck of a job.
Thank you.
You're welcome.
Thank you. I appreciate that. Ric Flair would thank you as well. Earnings per share of $1.63 over at Alibaba. I see you look at me. Yeah. You're taking notes. You're taking notes, and you're looking at me going, Cody, I am time stamping this. You need to say the name of the company first before you jump into the EPS. But I'm excited, my friend.
You are.
I'm excited.
You're fired up.
I'm fired up. I forgot the name.
That's okay.
It was Alibaba.
Yeah, that's Alibaba.
It's Alibaba.
Alibaba.
Well, how could I forget that?
You can't.
No, they threw it on a carpet. Alibaba EPS $1.63, beat the street by 4 cents. Revenues of $12.76 billion, beat the street by $400 million, up 51.5% in revenue year over year. That is growth. Alibaba destructive. We all know that already. Alibaba closed the week at $187.31 a share. Trailing price to earnings 52.82, little high. Look to the forward price to earnings on Alibaba. Really like this company. Core commerce up 57%. Cloud computing up 104%. Digital media and entertainment up 33%. Innovation initiatives and other up 9%. Again, in the hip pocket of the government of China, Alibaba is blazing trails and trying to really put the pressure on Amazon.
They are.
They're doing a good job. There's room for two.
Do you think so?
There is. There's room for two. That marketplace is the whole world.
Oh, for sure.
There's room for two, and Alibaba does it a little differently. They're gonna do. It's a great company.
For sure.
Fantastic. Do you notice that cloud computing here up lots, 104%. Cloud computing over at Microsoft up quite a bit.
Yeah.
I don't think Google had what their cloud computing specifically was up, but we've seen the numbers recently. Yeah. It has been up. What does that mean for Amazon's web service? Because people are pushing. Everybody's pushing cloud.
Everybody is.
And Amazon's web service is the leader. They're the guys. They're the ones with the contracts. NFL, Honeywell, Whirlpool, Time Warner. They got all the big contracts. but people are coming. They are, and then we're not even talking about Oracle or them. So I mean, all these companies in this cloud space, they're making headway. Amazon, that's one of Amazon's bread and butters there. I know that the Alexa and all that good stuff, the Echo is doing really good, and Amazon's making ridiculous record sales, but it's all about growth in a market space. That cloud was something that was definitely, that was theirs. And there are people now that are, they can see Amazon ahead of them. It's not too far. So Alibaba up 104% in cloud computing. Just saying. Altria, do you know what they do?
No, I do not.
They kill you. They hate your guts. They make these things called cigarettes. You get addicted and then you die. These guys are murderers.
Horrible.
They are selling murder. Their earnings per share of 91 cents beat the street by 11 cents. Revenues of $4.71 billion, missed by 90 million, and that's down 0.4% in revenue year over year because, forget these guys. Altria, 69.40 to close the week. Their trailing price to earnings of 13.05. We're going to look at Philip Morris next week, another company that hates your life.
That hates you.
Yeah, smokable products down 8.7% and smokeless products down 0.6%. So you're selling less stuff. Stop being such a jerk.
Yeah, maybe.
Yeah, maybe you'll have more friends and they'll buy more of your things if you made more stuff like Samsung did.
Exactly.
And stopped killing everybody.
Yeah.
Just saying.
Just say it.
UPS, the United Parcel Service that bought those 747 jumbos from Boeing, the 11 of the last 12 orders of those. Earnings per share of $1.67 beat the street by 1 cent. Revenues of $18.83 billion beat the street by $640 million. That number's up 11.2%. 116.47 is the price at the end of the week. That trailing price to earnings of 20.72. The shipping industry is doing quite well.
Quite well.
Purolator, DHL, UPS, FedEx. It's the shipping industry is doing well. There's a lot of money in it. Trump came out a while ago and said, why does Amazon get to take advantage of the USPS that's in debt, that has billions of dollars in unpaid pension plans and stuff? Because these private shippers are making a mint. They're making an absolute mint. So, Time Warner, we've mentioned these guys already today, talking about AT&T. Earnings per share of $1.60 beat the street by 17 cents. Revenues of $8.6 billion beat the street by 180 million, and that number is up 9% year over year. 96.75 is what they ended the week at. That trailing price to earnings of 14.61. Subscriptions up at HBO and Turner. The Justice League did 655 million worldwide. Revenues in their divisions: Turner up 10%, HBO up 12.7%, Warner Brothers up 4.8%. Time Warner, heck of a good quarter. MasterCard, one of the two big credit card companies out there, earnings per share of $1.14, beat the street by 2 cents. Revenues of $3.3 billion, beat the street by 40 million, up 17.9%. I'm just going to stop you here and say, if you heard me say double-digit revenue numbers up over and over and over again, and we're considering these bad earnings, this is why I'm telling you that market's just at a top. It's just a top. It's just, if you have to just live with the fact that it is what it is. These numbers are still phenomenal. These earnings calls, as I'm rereading them for the third time now, I read them once, I reread them to put them down here, to put the bullet points down, and I'm rereading them now out loud to you. The third time reading these, I've reaffirmed to myself, this earnings season so far has been as good as any earnings season we've seen recently, except that it's just, everything is already so high that it's impossible to see where there's an entry point now. That's, I think, the issue, is it isn't the entry point. So again, MasterCard earnings or revenues up 17.9% year over year. Close the week at 170.55. 46.73 is the trailing price to earnings. Switch transactions up 17%. Cross-border volume up 17%. They're not having enough problems with defaults yet, so obviously rates haven't climbed that much. But again, we're still playing in that 125, 1.5 range. We're not anywhere near where interest rates are going to be, even to close out 2018. We'll see what the defaults start to look like Q1 of 2019.
Right, yeah.
Alphabet, this was the big miss. So this was the one on the week that really sent things pretty cattywampus there Thursday going into Friday. Google, Alphabet, whatever you want to call it, Alphabet, $9.70 billion, or $9. What am I reading here? I'm half drunk. $9.70 earnings per share, missed by 37 cents.
Wow.
Hey, try reading 100 of these in a row. Eventually, it's going to all start looking like Japanese, right?
Yeah.
So $9.70 EPS, missed by 37 cents. Revenues of $32.32 billion, beat by $440 million. Revenue number up 24% year over year. I thought you were going for a pound, but you're just stretching your broken arm.
Yeah.
Alphabet. I was like, I'll pound it right in the middle of this. I don't even care. No big deal. I can read this. No big deal. Alphabet closed the week at $1,112 a share, trailing price to earnings of $37.50. I almost feel like I need a pound now. Might as well just hit me with one. So let's see. They're doing a repurchase of $8.6 billion that's in place. A repurchase plan. Google Cloud did $1 billion per quarter business. They're saying that's growing at a really high clip. Again, cloud just growing for everybody. So again, I guess Google is doing good. I just forgot that I actually wrote that down. Earnings up plus 18% ex the EU fine that they've got to pay for a little bit of antitrust stuff over there. YouTube and mobile search are the biggest revenue gainers over at Google, which again, they've branched off into so many industries. For YouTube and mobile search to be the biggest revenue growth things still to this day, it's got to be something else eventually that takes over revenue growth. They can still be they can be high revenue, but it's the revenue growth. The revenue growth should be some other industry over at Google. It shouldn't be these old guard. It should be something new that's growing. Not that's the biggest revenue gainer, but the growth. And YouTube better figure it out, because YouTube's getting more and more strict. They're another one that's going to start losing ad revenue. They think they're not, but they're in the same boat as Facebook. The eyes start going away and the content creators start going away.
Yeah.
Your ad revenue ain't going to last. So you better figure out this YouTube growth of ad revenue really quick. 60-minute average watch time for YouTube on mobile per day for people. Okay. That is a lot for YouTube subscribers. Alphabet doing fantastic. Like usual, we expect them to have growth from other divisions. They have too many divisions that have too much money. They've allocated far too many funds to a lot of stuff that should be growing at a faster clip. We don't want to see the old Google still being the thing that's driving the company. We want to see those be the leaders in revenue, but not the leaders in the revenue growth department. The growth should be higher in some other newer segment.
Well,
Personally, that's what I think. That's Alphabet. That's the story. We are continuing on. Earnings from Amazon. Did you like that? I gave you the name. Then you can write it down because you gave me the pound. Now I feel like we're on the same page. I feel like we're homies again. I don't feel like it's so judgmental from you over there. You've been giving me these side eyes. I haven't been enjoying the side eyes. They've been making me somewhat uncomfortable and moderately aroused. Amazon's earnings per share, $3.75. $1.83 was the estimate. So Amazon well above estimates. I'm sure there's a reason for that. Revenues of $60.45 billion. $60 billion in a quarter. Beat the street by $620 million. That revenue number up 38.2% year over year. See what I mean?
Yeah.
Amazon revenue up 38%. Like, how are we not just basking in this still? I think it's run its course, because then you look at it and Amazon's trading at $1,430 and their trailing price to earnings is $362. So even though everything's doing great, man, we're priced way out of the ballpark. 36% growth on a constant currency basis over at Amazon. North American revenue up 42%, international revenue up 29%, North American sales making up 60% of all sales. Expect them to double down on Alexa, said Jeff Bezos in the earnings call. He said it is doing exponentially better than they already expected. They're already the market leader in the smart speaker home
that's right.
stuff. Apple's just getting to market. So they're loving the Alexa thing. They think they can do more with it. They've got stuff with Whole Foods tied into it, stuff with Target. You can only imagine as they get into pharmaceuticals how many things are going to be tied in through the Alexa system. They're loving it. Bezos knows what he's doing. He is one industrious fella over there at Amazon. He's made himself a couple of dollars. Amgen, earnings per share of $2.89, missed by 14 cents. Revenues of $5.8 billion, missed by 30 million. That number is down 2.7% year over year. Here's another one of those laggards, right? No matter what, everything's up and you find yourself down on revenue. How are you down? Everything's up. There's money. Money is flowing like this is Scarface, and you're down. Negative impact from tax reform and Jobs Act. That's going to affect that EPS number. Product sales down 1.7%. Key product sales up across the board, though. Amgen closed the week at 187 and 1 penny. Trailing price to earnings of 16.92. But still, when you're down, you're down.
Yeah.
That revenue's being down in an economy like this. Just, I mean, what are you, Mattel?
Ooh.
What are you, GoPro?
Yeah.
We're getting there. GoPro. Earnings per share missed by 30 cents. Was supposed to miss only by 11. They missed by 30.
Ouch.
Revenues of $334.8 million. That missed by $5.28 million. That's down 38%. Down 38%.
Well, that ain't good.
This company is eating it. This is one of those companies that was a darling of the market.
Yeah.
You know, they have those fancy new products. And they think, oh, this little fisheye lens camera that I can take scuba diving with me once in the next 10 years. It's going to be the big market turning point. GoPro looking for a buyer. $5.55 to close the market. They were up at $11 a share at one point this year. The sales are way, way down. There's an acquisition in the mix. The CEO's already come out and said they're not adverse to being bought out. I don't even know who would want to buy them out, but they must have some proprietary technology that's somewhat interesting. But as far as a company in and of itself, the growth is over. The dream is over. It's over.
Yeah,
it's over.
It's over.
It's over. So what are you, Mattel? Mattel, earnings per share of negative 72 cents.
Ouch.
It was supposed to be negative 89 cents, or it was supposed to be positive 15 cents. They missed by 89 cents. Revenues of $1.61 billion, missed by 80 million, down 12% year over year. They're trading at 16.53. Like I said, they got a good bump, 7 or 8% on Friday. Don't know why. North American revenue down 17%, sales down 12%, American Girls Brown down 21%, Fisher Price down 11%. Mattel's CEO came out and said in the investor day in June, they're going to let people know just what the turnaround of Mattel is going to be. I'm going to assume by the investor day in June, the CEO has run away with one of those dollop bags with the money sign on it. He's gone to some private island with no extradition. Yeah. You're waiting until June.
As soon as he put out that statement, he's gone.
Yeah, wait until June. It's over.
You wait until June, be like, he's in Barbados right now.
Yeah, Mattel is a train wreck.
No, they had some good brands. Well, they do have some good brands.
Yeah. They have Hot Wheels. They've got Barbie. They do have He-Man and stuff, but they do. They license that out to Super 7. Yeah. But that's without them getting in with Hasbro. We got Hasbro earnings next week. Without them getting in with Hasbro, I don't know. I don't know who's going to be able to do it like Mattel does.
I don't know.
I think we might just end up losing. We might lose Toys R Us and Mattel in a couple of years together.
Well, yeah.
But Mattel's not an investment. That's for sure.
No, definitely not.
Unless you really believe that there's going to be a turnaround. I don't see it with any of the numbers, so I'm not sure how you'd see it. Visa, the main credit card company in the world, EPS of $1.08, beat the street by 10 cents. Revenue of $4.86 billion, beat the street by 20 million, up 9% year over year. $120.91. Trailing price to earnings $44.72. Apple, $3.89. I did it again. $3.89. Beat the street by 4 cents. $88.3 billion in quarterly revenue. Yowzers. Beat the street by 670 million. That number's up 12.7% year over year. Apple said that they are going to take all $163 billion in cash that they have, and it's going to be used for capital allocation. And they're going to start doing that almost ASAP, mergers and acquisitions, buybacks, dividends. They're spending all of it. $163 million being deployed down to zero. Yeah. Apple closed the week at $160.50. Trailing price to earnings very cheap, $17.45. Unit sales at Apple. iPhone down 1% year over year, but the revenue up 13% year over year. iPads up 1% year over year, and the revenue up 6% year over year. Macs down 5% with revenues down 5%. Services up 18%. Other products up 36%. Apple, not a lot I could say. Great company if you're in enjoy. Yeah. They just repatriated more money than most S&P 500 companies will ever have.
Yeah.
They just repatriated that. So they're 163 million of capital allocation being deployed very, very shortly. You can only imagine being a shareholder of Apple is a prosperous sort of a gig.
Oh, for sure.
Prosperous.
Yeah.
Merck reported earnings, EPS of 98 cents, beat the street by 4 cents, revenues of 10.43 billion, missed by 60 million, revenue number up 3.1% year over year. Merck closed the week at 58.56 with a 56.85 trailing price to earnings. Pharmaceuticals up 4.3%. Animal health, because you need to keep your animals healthy, up 11%. Other revenue, unfortunately, down 50%. That is a big drop off.
That is.
Exxon Mobil, we see the price of oil going up. Exxon does not have the greatest production numbers, unfortunately. EPS of 88 cents, missed by 15 cents. Revenues of $66.52 billion, missed by $7.79 billion, even though that revenue number is up almost 18% year over year. Exxon closed the week at 84.53. 27.60 trailing price to earnings. Upstream did $2.5 billion. That's up $1.5 billion year over year. So that's good business. Downstream, though, down $289 million from last year. Global production overall down 3%.
Oh,
so
really?
with oil up, Exxon Mobil just doesn't seem to be in the right spots to be pulling out the kind of production they want to be doing.
No.
That's not good when you're the market leader, because
No,
they
not,
are
no.
number one, well ahead of Chevron or Royal Dutch Shell or
Yeah.
anybody else. Exxon Mobil is definitely your A1 go-to. That wasn't the greatest earnings call, despite the fact that oil is up. Sprint. Do you know what Sprint is?
It's where you run.
Sprint is where you run. Do you know what it is, though?
I believe it's a telecom company.
No, it's not. It's the last earnings call of the week.
Oh, really?
Thank the Lord.
Yes.
So I'm going to sprint out of here. Sprint did $1.76 EPS and $8.24 billion in revenue, down 3.6% year over year. Closed the week at $5.3 or $5.36. Raised guidance, quarterly income to $7.16 billion from tax reform. Total wireless net additions up 385,000. Postpaid net adds up 256,000. Sprint is a distant third, well behind AT&T and Verizon. It is brutal. Analysts aren't even covering this. We didn't even get EPS guidance. There was no guess. No one even guessed what it was supposed to be. No one cares.
No one cares.
No, SoftBank cares. SoftBank cares.
Okay.
SoftBank owns them.
They got a soft spot for them.
They got a soft spot. They're not sprinting away. They're sprinting to them, like open arms, like slow-mo, like across a field, like in a movie when you haven't seen someone for like 30 years.
That's why they buy more shares back.
Yeah, but then one of these guys falls down and breaks a hip because you realize this company, is a horse that should be shot.
Hope that doesn't happen.
Well, Sprint is it's a laggard in that industry.
Oh, it is. No,
T-Mobile is going to eventually end up passing it. Sprint can just not right this ship. Sprint needed that T-Mobile merger more than T-Mobile needed it. So Sprint needs to get to 5G, and they need to get there fast.
Yeah.
Next week, do you want to know who's got earnings next week?
Let's do it.
Bristol-Myers Squibb, Beazer Homes, Chipotle, Cummins, General Motors, Gilead Science, Walt Disney, Equifax. Ouch, they're losing your identity. Hasbro, Take-Two Interactive, Activision Blizzard, Cardinal Health, CVS, Expedia, Kellogg, Philip Morris, they're taking your life. Twitter, Viacom, the WWE, and GNC. Don't forget your test boosters.
Yeah.
This was episode 15. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
I can't read no more earnings. I need a nap.
Me too.
I
can't take a nap because I got to upload this.
That's true. Well, I'll take a nap.
Yeah, you can.
And you do this. This was fun.
It was fun.
This was
always fun.
It's always fun. Have a good time hanging out with you.
Do.
If you guys have lasted till the end of this podcast, you need more to do with your life. We'll see you next week.